Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Greetings everybody, let's take a look again at euro currency. So in the recent session was really fast, and actually we've got some clarity on the concern that we discussed in the weekly report. So although daily picture mostly stands the same, and we considered this pattern in weekend as well, but on the intraday chart, if you remember, we still had some doubts because it was a bit different performance of the dollar index in euro currency, and it was some chances that market could retest first to 102 area before the major reaction will start. Currently, chances for that have diminished, so it seems, and it's more probable for the upward continuation, but risks actually are not taken off the table totally, because here we have bearish grabber on the euro currency. It's difficult to say whether it will work or not, but still this is the factor of risk here, and the same grabber you have on the dollar index. So potentially it also stands on the bullish side, so it's suggesting possible rally on a dollar index as well. Since this is actually stands against normal technical picture, if any rally will happen here, it probably will be triggered by some data. It might be, I don't know, maybe by the end of the week it might be payrolls, but also it will be some inflation data maybe or something. Because technical picture stands in favor of the further downside retracement, while this grabber actually stands in opposite direction. So my personal opinion is that, well, I do not think that actually, well, chances that these grabbers will not work really high, but still we need to keep an eye on what's going on and actually watch for intraday performance. And here are some ways how we could set our trading plan to take it in consideration. So on a daily chart, we've got this nicely looking retracement, and actually we're also thinking about this pattern because we already talked about this in the weekend. This market stands on strong monthly support, and usually reaction on monthly support areas might be really extended. And fortunately, right on the bottom here, you could see and easily could recognize another hand and shoulders, but it's a bit smaller scale, right? So the part of the head is becoming smaller hand shoulders. It's some kind of the nested dough of the hand shoulders patterns, and this is very typical for any market that have the wave structure. So on the follow time frame chart, you could see this pattern closer, and market is coming higher. So supposedly neckline should be approximately around 104.50 area. Once it will be completed, we could watch for retracement for possible taking long position based on the daily chart and based on the patterns that we have. And that hand and shoulders will help us really a lot, just because it will minimize our potential risk. For example, we're taking position around 103.50 area, somewhere near the harmonically to the bottom of the left arm, right? So, and if hand shoulder starts failing, so dropping, price will start dropping lower, below 103, coming close to the bottom of the head. So it will be the sign that the daily grabber is still working and still stands in action, which is really fast will explain us that we probably should take it out of this top first before any other action will happen. If everything will go more or less normal, so market will flirt around 103.50 area, maybe here are some bullish reversal patterns might be formed on lower time frame, start upward action forming the hand and shoulders, that will be in favor of the failure of this grabber. So it will increase chances that grabber probably will not work. And this hand shoulders pattern will let us to understand this. Speaking about today's session, if we take a look at the hourly chart, here's on the to the upside we have the OP around 104.50. Maybe here my butterfly could be formed here to complete this target. And actually this OP stands very close to the neckline. Very probable that market will try to complete it first, especially when you see this kind of the acceleration that has happened recently. Right, so this is actually, as you know, the data on inflation in Germany was significantly higher than suggested, and this might be could change actually short-term balance between euro and United States dollar interest rates. So it could make impact on the European Central Bank as well. It will have the meeting on the 30th and 31st of the January. So with this acceleration, chances that market will try to complete OP are significantly higher. So if you are considering taking the scalp short position here, I suggest that it will be better to wait when the OP will be formed and maybe market will form some pattern, or if you do not want to wait, so anyway, it will be better to hide your stop above the OP area because chances that it will be reached really significant. So then if pullback will start that we're watching for, we'll start watching for this area. So that being said, in 2 words, for our primary scenario, we do nothing right now, waiting when the market will start forming right arm of these hand and shoulders, and then considering taking a long position approximately around 103.50, 103.55 area. This is my major plan. Secondary plan, if you're trading on the very short-term charts, you theoretically could consider taking a short position with the downside retracement, but this is not our primary object. Also, as a add-on to this current situation, we recommend to keep an eye on the 10-year bonds. Why it is important? Because those of you who are watching our Bitcoin videos, we talked about this recently. So this is 10-year bonds on a daily chart. This is the yield, 10-year bonds. Take a look at market is forming, or at least could form, the double repo pattern. Now is the most decisive most decisive moment. If market will fail to break it and keep going higher, the double repo probably will be formed. And you understand that if we will get the bearish double repo on the yields, that will be very supportive for euro currency because it will be negative for the dollar. Retracement could get additional cross-market confirmation. And daily double repo on the 10-year bonds will stand in favor of the big pattern. It's not about the small pattern, it's not about this one. It is about this one, this big large pattern, especially when you see that the inflation in Europe stands higher. So taking it together, double repo on the 10-year bonds and higher inflation in Europe, that really might be really a good boost for euro currency in the short term and could push market with this hand shoulders pattern for significant pullback. So that's why we think that definitely worth our attention to keep an eye on the 10-year bonds as well. So that's probably all for today. Let's keep watching and see how situation will progress.